Hey, this is Chico. Welcome to this video series about selling call options. This video is a little special video that I want to make per somebody's request to go over about how much money that this video series has been making. So we can look at those numbers in this video here and also some other statistical figures.
So, okay, before we looked at the performance figures, let's refresh on how we run this call option, selling call option demonstration. So every month we reset the funds back to 40K, regardless where it is. And we don't carry the profits or losses into the next month. So 40K at the beginning of each month. And we avoid using margin. It's up to you if you want to use margin, but for this demonstration, we want to keep it simple and say no margins will be used. Now, if you did use margin and you were making money, you can definitely make more money than what is shown in this demonstration. And we focus on making money on the premium for the call contract that's sold out to the buyer. So when we sell the contract out, the buyer pays a premium for this contract. That's what we're trying to make money on. For cover calls, you would hold the stock. You would already have the stock on hand, and there's appreciation, depreciation of that stock, but we're not calculating that. It's up to you if you decide to use a cover call or a naked call. Typically use a cover call because you already are holding the stock for the purpose of hoping that it will go up and sell it later or much further in the future. And so the gains and losses of stock is not a focus. We just do the cover call because it helps with our budgetary calculations to keep it under from the 40K that we're given at the beginning of each month. Okay, so here is the table of our performance between February 10th and June 6th. As you can see, in February, we started on the 10th, and we were 5 out of 7 trades, and we made $462. Our trade success rate was at 71%. And then in March, we were 6 for 6. We had a perfect month, and we made $1,854. That equated to 4.64% from if you took the profits from 40K. Then April, we were doing great. We ran up the streak from March, but then on the 4th out of 5th week of trading, we got slaughtered with Palantir and Carvana. So all our amazing profits were wiped out, and we were down 2% of the month. The last week we did make money to recoup some of the losses too, but that was a very good month for us to show that even you had a really bad week, a bad trade or two, that you're able to recover from it somewhat. Certainly the following month, we were 15 out of 16th in May, and we did recover from it. In fact, we had a record month. We wrote a lot of earnings events from a lot of various companies, and so this was the beginning of earnings season, and we made a record of $3,936, which equate to 9.84%. Then in June, in the first week, up to June 6th, we're 3 for 3 trades, $723, and the monthly percentage will be TBD as we're not finished with the month of June. And what's important here is I wanted to mention it's important to master the number of successful trades. I think that's a very powerful thing. So we're 42 out of 47, which equates to 89%. I mean, that is a pretty high percentage of success rate, and especially over 47 trades. So I think that's a very powerful thing. And then you can adjust things once you have that kind of power and decide what you want to go from there to do, and gives you a lot of control basically. And so here is the figure also then for how much we made during this whole video series between February 10th and June 6th. $6,173. To continue to summarize the performance from February 10th to 6th, we made 42 profitable, successful trades out of 47. That's at 89.36%. And I stress, it's very good to be able to achieve such a high rate of success.
Also, to be able to achieve a high percentage of profitable trades and to master that, it allows you to adjust your risk level. If you feel like you're doing very well and you want to be a little bit more aggressive, you can. And then the other thing it is good for is if you had one bad trade and it kind of blows you out of the water, it gives you the confidence to know that you can come back and recoup all that. And I think a lot of people lack this. Another thing is when you're ready, you're able to achieve this. And I would suggest using a simulation platform with fictitious money, of course, to prove yourself out and your ability to achieve such a high success rate. Is then you can start using margin, you know, and using more margin. But margin itself is a very dangerous thing. Margin can make you a lot of money and you can hit home runs one after another, but one bad experience can really sink you and really make it hard to come back from. So yeah, for people who are new to margin, I don't recommend it. I suggest you get a lot of experience before you start um, uh, using leverage, using margin.
Next, the average profit per trade is $131. And throughout the course of this time, we made a total profit of $6,173 from the premiums collected for selling the call option contracts sold to a buyer. Again, I want to remind you, each month the portfolio is set it back to 40K regardless of how much money is made or lost. And therefore, it is different than if the profits or losses were carried over each month. And especially if you were, like in our case, we were mostly profitable except 1 month, we were likely to be able to achieve a greater profit than the 6,173. So the amount of money and percentage made each month is a better metric than this total profit figure in my personal view. That's so you can look back at that slide and you can see how much money the money was made and the percentage of each month in the contract and incur the loss. So after calculating the premium that we collected and the loss that we had to take from buying the stock off the stock market and sell it to the buyer for a lower price, we would lose $2,400 and $2. So yeah, that was a big loss, and it ate up a great deal of our profits that month and put us in the red. But that wasn't the only trade that month. We were down 2% that month, and we had a lot of profitable trades to help at least offset it and minimize the damage. We got it down to 2%.
Okay, so there you go. Those are the numbers. And let me know what you think. If you have any comments, criticism, or suggestions, yeah, put them in the comments and share your thoughts. All right, I hope you liked the video. If you do, please hit the likes button and we'll catch you next episode.